Did you hear France is locking down again?
Wow, apparently they reported 35,000 new cases this Thursday.
And there were more COVID patients in the ICU in Paris than at the peak of second wave.
Friends in the US should be more careful now, since some states have reopened and the CDC has loosened up the COVID school guidelines.
Before we start today, let's hope everyone stays socially distanced and stay safe.
Yup, so what's on the menu today?
We will review the market from last week and talk about some implications about SLR expiration.
Interesting. Also, don't forget our weekly picks.
The S&P stumbled from the resistance level we mentioned last week and is reversing to test the first support level at 3860 to 3870.
Looking ahead, we can expect two situations. First is the S&P testing the first support level and bouncing with strength.
And that will form a nice cup and handle formation to break the upper resistance level at around 3960. Or second, we could see a gap up on Monday and sell off during the day to test the support level around 3870.
This is a critical support level. If this doesn't hold, we are likely to see more downside to the second support level to consolidate a higher low in this uptrend.
Let's take a step back and look at the bigger picture. In the S&P weekly chart, it's wedging upward, and this is a typical reversal pattern, so we should keep our eyes on it.
Looking at Nasdaq, it's playing out our downside scenario from last week. We are expecting more downward pricing action if S&P retraces to the second support level.
Again, the first support level for Nasdaq into next week is around 12,700. Next support level is around 12,400.
Something that could potentially spark the downtrend got a big update this Friday.
Fed announced that the SLR exemption to help increase banks' ability to take risks during the pandemics will expire as scheduled on March 31st.
Before we get into the exemptions, supplementary leverage ratio, or SLR, all it is the capital, which are the common stocks, banks' retained earnings, plus lendings divided by the total leverage exposure. In other words, the numerator is your capital available to cover your risk, which is the denominator.
Smaller banks are required to have 3% capital, and global banks are required to have 5% capital.
The exemption includes the US Treasuries and deposits with Federal Reserve banks.
This means that after March 31st, the banks will have to add their US Treasury bonds to the denominator, and that will decrease their SLR.
And by decreasing their SLR, the banks will have to make adjustments to their holdings.
Basically, before the banks can hold bonds that will not count toward their total risk, and starting March 31st, they will count.
As the banks are expecting SLR exemption to expire, they've been dumping the Treasury bonds.
And when nobody wants to hold treasury bonds, the bond yield go up. And when the bond yield goes up, the stock market gets hit.
We think this could be an example of buying the rumor, selling the news. The banks have been making moves in advance of this news. And now that it has happened,
the bond yields could soon reverse from the current level, and the stock market could rebound from the recent corrections.
But also keep in mind, there's still $1.2 trillion left from the recent $1.9 trillion stimulus package to be injected into the bank system.
So it is unclear on how the bank will handle this. Will they sell more treasury bonds to make rooms for the cash? If they do, then the dumping will keep driving the bond yields up,
which might inflict more fear for inflation and potential interest rate rise to stabilize this manipulation.
If this is the case, the market still has room to go down.
As we go into our picks of the week, we want to remind everyone that we do not recommend the growth stocks in tech that don't have solid revenue earning backing in case of a sell-off, as there are a lot of uncertainties in the market.
That's right. My first pick of the week is PENN. With its recent S&P inclusion news, this is definitely a buyable dips into next week.
And my pick is TSM. I'm still long on semiconductors. I will be adding more around 110.
TAN is looking very attractive at the current level. This is a solar ETF with huge upside potential in the next couple of years. I will initiate a position around 82 to 83 levels.
My last pick is XLB. Biden's infrastructure plan will directly help this materials ETF. I will start small on dips.
Thank you for watching. If you find this video helpful, feel free to give us a like and subscribe for more content like this.